This is Daniela Camboni for Kitco News, continuing with our coverage from the New Orleans Investment Conference. Joining me now is one of the speaker and panelists from the show, Dennis GARTMAN. Dennis, thank you so much for being with me.
Always good to be here with you. Thank you, Danielle.
So, Dennis, don't mean to call you out on this, but you said it yourself today on the panel. You said, I live in gold for 3 hours and then on to the next one. You're in, you're out, you're in, you're out. Right now, you are?
Right now, I am basically out. I've told people all we want to have is a core position, and I mean that's just a very small amount of gold. There have been times when I've had 4, 5, 6, 7 times more gold than I've had now. Now I'm down to a very small position, and I'm actually uncomfortable with even that small position.
Right.
I think gold looks vulnerable at this point, and should 1,700 be given in the next several days, and more importantly than that, should 1,300 euros in gold be given, I think you could have another sharp decline on the downside. Too many people are still bullish, I think, for the wrong reasons, and I think there's a sharp break coming.
So what do you think is adding to that pressure right now?
I think it's very simple. I think too many people misunderstand what the Fed is doing. I hear nothing but people explaining to me, the Fed is overexpansive, the Fed's injecting too many reserves into the system. I think they're looking at the wrong numbers. If you look at M1 or M2, yes, those numbers are going up. But the Fed's the most important data point to look at, as far as I'm concerned, is what does the Fed itself really own? And the only place that you can see that is what's known as the adjusted monetary base put forth every week by the Federal Reserve Bank of St. Louis. And the adjusted monetary base for the past 14 months has gone sideways. In fact, it's actually gone down slightly. So the Fed is not easy. The Fed is actually somewhat tight. And I think too many people have bought too much gold expecting the Fed to remain overtly, manifestly, comically easy as they were in 08 and 09. And instead, right now, they're not doing that at all.
But they have openly said that they will continue to print money.
You know what they said? They said two things. They said they will continue to buy, $45 billion worth of mortgage securities on a regular basis, and that they would keep the overnight Fed funds rate low for a long period of time. That's what they told you. Now, they didn't say anything about what they're going to do with the assets that are already on the books. And what I'm looking at when I see the adjusted monetary base is, indeed, the Fed is adding government securities or mortgage-backed securities every month. But we forget that at the back end, old securities are maturing. They're going out the back end through the maturation process. Fed is, in fact, buying $45 billion worth of treasuries or mortgage-backs every month. But at the back end, they're maturing off. So the adjusted monetary base is not growing at all. And the adjusted base should probably grow 2 to 3% a year along what you would like to see GDP grow, and it's not doing that. So that money that everybody thinks is being injected into the system is simply not.
Okay, interesting point of view, different point of view. You mentioned GDP. Your fellow panelist today, Mark Faber, said GDP should not even be looked at as a gauge for the economy. What do you think about that?
Well, Mark Faber. I love Mark Faber. Mark likes to cast a doubt on every government statistic from almost any government anywhere. We have to believe in some numbers. We have to give them some credence. Do I honestly think, though, today's GDP number said that third quarter GDP rose 2.0%. Do I think that GDP rose 2.0%? No, it probably rose somewhere between 1.5 and 3. But they had to put a number on it, so call it 2. And that's all Mark was saying, is that you can't trust the numbers to be that precise. Right. I'm amused, for example, by the number of people who are always trying to forecast Chinese GDP. Mm-hmm. Chinese GDP was 8.7%. Chinese GDP was 7.8%. My response is, if you can get Chinese GDP within plus or minus 10%, you've done a very good job. Right. So be careful with, all Mark was saying is, be careful with the statistics.
So let's go back to that pressure on gold, and let's look at Chinese and India demand and how that might play a factor. What have you been hearing on that front?
Well, the problem that the Indians have is that their currency has been extraordinarily weak. It makes it difficult for the Indians to be buyers. Gold has been under pressure this week. We're here in the end of October because India has been removed from the market. They've been on holiday. You have Diwali coming up in the next couple weeks. Gold better rise on Diwali demand from the Indians. If gold can't rise on Diwali demand, that's the big period of time for the Indians to be buyers of gold. If gold won't rally on that, gold's got a problem.
Okay, so you said you would not be surprised if you saw gold drop back down to?
Write this down. If it breaks 1,700, it will go down until it stops.
Until it stops.
I have no bloody idea.
Okay.
All I can tell you is I think if 1,700 is given, gold's propensity to decline relatively sharply will be very high. Where will it go? I haven't the faintest idea.
So would that be the cue for you to get back in then?
Write this down. When gold stops going down, and I won't know it stopped going down until several weeks after it has stopped going down, when gold stops going down, starts showing signs of stability, then I'll be interested in owning some more again.
Okay.
But do I have any idea what that price will be? I haven't the faintest idea what that price shall be.
Dennis, I'll be calling you in 6 months.
I always look forward to getting calls from you.
Thank you so much for your thoughts today.
All right, be well. Cheers.
Thanks. Thanks for watching our continuous coverage from the New Orleans Investment Conference. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone. Dennis, thank you so much.
Always easy.